Hey everyone, welcome back to Corporate Decoder, the place where we decode the money talk and figure out what's really going on behind the scenes. Today we're diving into a fascinating filing from MediaCo Holding Inc. And let's just say there's a bit of a surprise party happening with their stock. Before we get into the nitty gritty, if you love getting your hands on clear, no nonsense analysis of company reports, make sure you hit that subscribe button. And hey, if you want to chat with us and other finance enthusiasts about these filings, join our Discord server, linked in the description. So MediaCo Holding Inc. just dropped a Form 8K report. Now, these reports usually mean something important just happened, something that the company needs to tell everyone like yesterday. Think of it as a flash announcement from the corporate world. This report is all about a very specific event concerning MediaCo Holding Inc., which is the company we're looking at. The key date here is September 8th, 2025. This is when the main action described in this report took place. Now let's get to the juicy part. The filing mentions unregistered sales of equity securities. This means the company sold some of its own stock, but they didn't go through the usual registration process with the government. On September 8th, 2025, MediaCo Holding Inc. issued a massive amount of shares, over 28 million shares of their Class A common stock. Now here's the kicker: the price they sold these shares for was just 1/100,000th of a cent, that's $0.00001 per share. This happened because of something called a warrant. Think of a warrant like a coupon that gives someone the right to buy stock at a fixed price. In this case, SLFLBI Agreeder LLC had this coupon and they decided to use it. They then explained that this sale was done under a specific rule that allows companies to sell stock without registering it if certain conditions are met. This usually happens when only a few sophisticated investors are involved. For context, MediaCo's Class A common stock trades on the Nasdaq Capital Market under the ticker symbol MDIA. Now let's put this into perspective. Why would a company issue so many shares at such a ridiculously low price? Typically this happens when things aren't going so well and the company needs cash. By issuing new shares, they can get money into the bank. However, when you issue a lot of new shares, it's like adding more slices to a pizza that's already been sliced. Each existing slice becomes a smaller piece of the whole pizza. This means the ownership stake of current shareholders gets diluted. Their percentage of the company shrinks. So issuing over 28 million shares at practically no cost per share suggests that MediaCo Holding Inc. was likely in a tight financial spot and needed immediate funding. This could be to pay off debts, fund operations, or perhaps make an acquisition. The fact that this was an unregistered sale often means they were dealing with a single large investor or a small group of investors who are more experienced with these kinds of private transactions. From a Warren Buffett perspective, whenever you see a company issuing a huge number of shares at a dirt cheap price, it's a yellow flag. It signals potential financial distress. You always want to ask why they need the money so badly, and if the investor of existing shareholders, it's like buying a company's stock for pennies on the dollar. While the filing doesn't contain detailed financial tables, this specific transaction is a major event for MediaCo. It tells a story about their capital structure and their reliance on finding investors willing to inject cash, even under unfavorable terms. This could be a sign of a company struggling to raise funds through traditional means like borrowing from banks or issuing more traditional equity. The significant dilution caused by this issuance means that shareholders who held their stock before September 8th, 2025 will now own a smaller percentage of MediaCo. For example, if you owned 1% of the company before, you might now own much less depending on the total number of shares outstanding before and after this event. This type of action often comes with a need for more capital down the line. It's a temporary fix that can create bigger problems in the future if the company doesn't improve its underlying business performance. It's crucial to watch how MediaCo uses this newly acquired capital and whether it can translate into better financial results and a stronger market position. Looking at this from a strategic standpoint, selling stock at such a low price might be a necessary evil. However, it can also signal a loss of confidence from the market and existing investors. It's a difficult balancing act for management trying to keep the company afloat while also trying to maintain shareholder value. So to wrap up, this particular filing paints a picture of a company potentially facing financial headwinds, needing to raise cash urgently. The move to issue a massive amount of stock at a nearly zero price point, while technically legal and explained under exemptions, highlights a critical moment for MediaCo Holding Inc. The long-term impact will depend on how this capital is deployed and whether the company can turn its fortunes around. Alright, that's our quick dive into this MediaCo Holding Inc. filing. What's your take on this massive share issuance? What does this tell you about the company's financial health? Let us know your thoughts in the comments below. If you found this breakdown helpful, give it a thumbs up, and most importantly, subscribe to Corporate Decoder for more essential financial insights. And don't forget to join our amazing community on Discord. The link is waiting for you in the description. Thanks for watching, and we'll see you in the next video.